Hi, good morning. This is Tim Paholic from Gold Star Mortgage. Hope this video finds you well. Today, I wanted to talk to everybody about a pre-qualification. What exactly is a pre-qualification? What goes into a pre-qualification? And why do realtors and sellers of properties ask to see that you're pre-qualified before purchasing the home? Well, number one, a pre-qualification, think of it very much the same as a credit card offer that you receive in the mail. It says that, Amex sends you something, you're pre-qualified up to $10,000. There's either an application in the envelope or you're encouraged to go to a website and apply online, whatever it may be. They're pre-qualifying you based off of factors that's in your credit report. It might have to be with your income, your credit score, whatever it might be. They're pulling what's called a soft pull on you, and they're qualifying people and sending them out correspondence to get them to apply for their credit card. So when it comes to a mortgage, a little bit different. Mortgage companies aren't sending out letters that say, "Hey, you're pre-qualified for a mortgage," unless you're a current customer and they're marketing back to you. But in general, if you're a first-time home buyer and you're looking to get pre-qualified, what goes into that? Well, you're going to contact a lender, loan officer, whatever it might be, and a couple things. They're going to ask you to complete an application, pretty basic information, your name, social security number, phone number, address, stuff like that. And then what they're going to do is they're going to pull your credit. That's the first step. So all lenders are different, but for different programs, there's different credit score requirements. So if you don't meet the minimum credit score that's required, that's problem one right there. So we know that we can stop the process right there. So if you do meet it, then we move on to step two, which is the income. So let's say that the minimum credit score required is a 620 score. Pull the borrower's credit, it's a 650 score. Great, they qualify. They meet the score standard. Now let's see their income. So a loan officer is going to look at the income that you provide, and they're going to say, okay, well, they make X, let's just say a round number, $5,000 a month. Their mortgage payment's going to be $1,500. There are other total debts, total $500. So that's a total of $2,000 in payments. Divide that number by 5,000, which is the monthly income, and you get a percentage, which is called your debt to income ratio. Provided that number is below the maximum that's required or that's allowed, I should say, for the loan program, you'll qualify. Now, you'll notice that I said two things that are very important. Number one, I said that they're going to review the income that you provide. So, assuming that the loan officer does their work ahead of time, they're going to ask you to provide income so they can review that. Otherwise, if they're going to go the quick way, they're going to ask you, so how much income do you make a month? What do you make? I make this. Okay. Well, they can qualify you off of that number, certainly. And if you have the credit score, great. You're pre-qualified. They can turn out a letter, send it to your real estate agent. Boom, they're pre-qualified. No problem. They can afford a mortgage up to X, $300,000, whatever it may be. Awesome. The only problem with that is that they haven't reviewed your income. They're going off of what you told them your income is. So, there's different scenarios. If you receive a salary, that's what you're qualified off of. If you're hourly, it depends on your hours and the average hours that you work. If you're self-employed or you're 1099, are you writing expenses off? That affects your bottom line. That affects your adjusted gross income. So if a professional doesn't review that, um, you don't know what your exact income is and what figure that the underwriter is going to use. So it's very good and it's in your benefit to provide that information upfront to your loan officer so they can review that, so they can have an idea of how much money that you make, so they know exactly, so there's no surprises. I'm reminded of someone that I was working with that was 1099, and they wrote off a lot of their expenses. They weren't aware of it. They had someone to um, prepare their taxes, a CPA, and all of it was on the up and up and legal, of course, but they wrote off everything. Where that hurts them is their monthly income. They wrote off 90% of their income. So what they made monthly and what they showed on their tax returns were two different numbers. Well, guess what? When you're going for a loan, The government's going to look off of your tax returns and see what your income is. They're not going to go off of what you told us that they made. So it's very important to provide that information. But also, and you see things like commercials, for example, Rocket Mortgage. You fill out that information, you're telling them what your income is, and they're going to pull your credit and get an idea of your score, but you're telling them it's not being reviewed. So, is it really worth the paper it's printed on? Not if an expert doesn't review it. It's not worth anything because they don't know. They're going off of what you tell them. And yes, if this is true, then you qualify. Well, fast forward now, you go, it's time to purchase a home, and you submit and say, hey, yeah, I'm pre-qualified. Now you've put all this time and this effort, and maybe you are, but then let's say that you're not. Let's say that you have a lot of write-offs and you're not aware of how it works. Well, then you go to underwrite that file, and it comes time, and your loan's denied. Not only are you upset, you could have a wife or a partner that's upset. You could have family members that are upset, but you're upset, and you wasted time. You wasted the real estate agent's time, and you just didn't know. So, um, very important. Supply your income up front to people. Show it to them. Let a professional review your income so you know that you are qualified to purchase a home. So the second piece to that puzzle that I mentioned was, why do real estate agents and why do sellers want to see that you're pre-qualified? Well, it kind of dovetails back into what I mentioned previously. They don't want to waste their time. They certainly don't want to consider your offer if you're not pre-qualified to purchase a home, because it's a useless offer, right? If you can't afford to get a mortgage, or you don't have cash to pay for the home, then why should they even entertain your offer? More importantly, should the realtor even work with you? Because you need to get with a mortgage professional if you don't qualify, on how to raise your score and how to qualify to purchase a home. So um, that's a real reason why they ask for it up front, because they want to know that you're serious. Now, to take that one step further to what I just mentioned to you, was that it may not be that you truly are qualified, you're pre qualified. So um, it's good that you can work with a lender, and you can find lenders like myself, for example, that will fully approve your file. They'll underwrite your file, they'll look at your income, everything before you actually go and start shopping for a home. Why is this a big benefit? It's a big benefit to you because um, you know that you're approved, and you know how much home you can afford. There's really four pieces to the puzzle to get in a mortgage. It's the collateral, which is the property. So as a buyer, you have no control over that. It's the title work. Again, as the buyer, you have no control of that. You're entitled to get clear title when you purchase the home. The other pillar is your income, which you have all the control over, and your credit score, which you have control over that too. So when you think of the four pillars, two you have control over, two you don't. The two that you can control, if you know that you meet those requirements, you're good, because if there's an issue with the home or there's an issue with the title, you don't want to buy that home anyway. So you're protected. Um, but I would encourage you to get approved before you start shopping for a home. And if you don't, if you're going to get pre-qualified, submit your income to your loan officer. Submit 2 years tax return. Submit a current pay stub. Tell them everything up front, because they need to know. They need to know how to structure the loan. They need to know everything that's going on so they can explain it to an underwriter. Because when you do submit your application, an underwriter is just looking at the application and the data that's provided. They don't know your personal situation, and you don't want to risk, having the issue of not getting financed. So um, I hope you found this video informative about a pre-qualification and what goes into it. Most people can do it for you in 24 hours, um, but it's definitely an essential step, and something that I would start with first, before if you're starting to look for a home, and talk to a professional first to find out what your options are and what you can do. So if you like this video, please click the like link below, subscribe. I plan to put out more content that's available for consumers to educate them on the process, to make it less daunting. Um, Videos to share with agents, whatever it may be that they can share with their customers. just to make the process a lot easier and create a greater understanding. So thank you very much. Take care.